Good morning. This is Vince Lanci. It is 8:01, October 26th, Friday, December. No, Friday, October. Okay, it's not December yet. All right. All right. So here we go. We're going to do an extremely abbreviated version. Keep it tight today. 8:30, we have GDP, and we want to be on the air when that number comes out um, on the AM roadmap, which we lead into. All right. Um, this will all be on a post. There is no post yet because I didn't flesh out the notes and I wanted to speak the notes to these sort of headline type of things. So follow along if you can. If you have been following along, if you have been on this program before listening, you should be able to follow along. If not, just do your best. All right. Headline: Gold doesn't care. Why headline? Gold doesn't care because the dollar is stronger. Gold doesn't care because my comment about palladium being a leading indicator for gold on the way palladium has been coming off pretty decisively for the last couple days. Gold doesn't seem to care. The yuan is making new highs. That is, it's becoming even weaker than normal. Gold does not seem to care. So, which brings us to the next. So all those correlations, which are always tenuous at best in a market like gold, uh, uh, are um, are suspect. So basically, you could say gold is its own market right now. You could also say gold has been its own market since May when it started selling off to basically to negative infinity as the dollar was not ramping up to these new highs. Well, actually, I think it made these new highs in August. Point being, point being is that I think so new hypothesis, and this is not a new one; it's an old one coming back. Uh, if you remember, some years ago, between I'd say 2010 and when we made the highs in gold, uh, and considerably after that, actually, gold had been appreciating in almost every currency terms. You know, outperforming in the dollar because the dollar was weaker, but during QE, but gold had been performing in terms of every global G7. We'll just say G7, G10 currency. And I think what happened on the sell-off, on the precipitous sell-off we had in May, is gold was not only depreciating in dollar terms, but it was depreciating in every currency terms. And I could lay that at the feet of Venezuela selling. So basically, that was gold dropping because gold dropped. So not only did it depreciate in dollar terms, but it depreciated and went down in value in every term, every currency's term. So it wasn't just a dollar proxy. You know, there is an aspect of gold that goes beyond its dollar inverted relationship, and that is its value beyond that as a safe haven, if you want to call it that. I don't. As a wealth storage, as a means of storing your wealth, and as a tradable vehicle. And again, gold is a smaller, much smaller market than you. With $1 trillion, you can corner all the gold in the world uh, with a little leverage. Gold is a much smaller market than these markets, and therefore it will skate, overreact to moves because there's just not as much depth to take out uh, exaggerated moves. So here we go. Gold remains stable in the face of the US dollar. We'll go through the things that it's not paying attention to. All right. Something is off or nothing is off. My point by that is something is off, meaning we're due for a major washout in gold or a major washout in the dollar. Now, if that were the case, I would be in favor of the gold being the weaker sister and gold washing out before the dollar does. It's happened during wars. It happened during Brexit. Okay. So that's if nothing is off. Everything that I'm saying about the two decoupling, dollar either sells off or gold either sells off, will happen. It's been delayed, but it won't be delayed. When it does happen, it'll be bad. Or nothing is off. The nothing is off concept basically is uh, a reiteration of what I just said. That gold is again repricing itself in terms of all global currencies to be stronger, and that would be nothing is off. There is a third one that I don't have there, and that is that depends on where the demand for the gold is coming from. If the demand for gold is coming from Europe, and if you look at the dollar index, it is a large chunk of that is the euro, and the euro is weaker, and the British pound is weaker. Between Brexit being potentially a ridiculously hard Brexit now, with no plan in place, and Italy not being anywhere near solved, and believe me, I think Italians are more comfortable with double-digit inflation than the Germans would have you think. They're not afraid of crisis in that respect. Uh, they don't they're not afraid of it as you think, as many people think. But the point is, if the buying of gold is from Europe, then it is that buying that is saying we want to buy dollars, but we also recognize that the dollar is slowly becoming less of a global reserve currency. Therefore, we're going to throw a little money into gold. You know what? If I were a trade partner with China and I knew that China was buying a lot of gold, and I also see Eastern European countries like Poland buying gold. Again, not that they're leaders, but they're certainly not dummies. I would say might be a better idea to start allocating more money into gold, because until between the dollar not being the reserve currency of the world, which is going to take years, not days, not months, and uh, let's just say China is the successor with a petro yuan if they have their way. There's going to be a golden bridge from one to the other, and it's quite possible that the buyers of dollars are buying gold out of Europe, and this time they're not buying it to sell it, which is why it's so orderly and not so spiked higher. All right, so third thing I wrote there is silver still struggles with identity crisis. That means silver is part precious, part base, and it certainly got hurt a lot more on the big sell-off on the way down, starting in May, viewed more industrially than monetarily, and in this rally a lot of people got killed buying silver, selling gold on that gold silver ratio, which is imaginary. Doesn't mean you should ignore it, but it's an imaginary relationship these days. It won't be imaginary if they confiscate gold and silver is out there, but right now it's imaginary. Trade it, but don't believe in it. This is no cross of gold relationship back in whenever the free silver thing happened. All right, the identity crisis stems from now gold is firm in face of a firm dollar, yet at the same time, um, silver is not appreciating at the same or higher rate than it when it does rally, and it seems to be held back by the other base metals. FX overview. Dollar index is holding above 96. The next important target is around 97. Easy psychological number to work with, which checked the rally in August. That was my point. The euro is also trading in 2 month lows. Again, we already discussed that. Another thing that the market is ignoring, the offshore yuan, which is more important than the onshore, um, uh, especially during our hours, almost touched 7 at midnight US time. That had no negative effect on gold, as it seemingly has had a negative effect for previous months. So there's another obstacle to gold's rally getting out of the way, at least apparently. Uh, the gold buyer came back last night at 3 a.m. Gold picked its direction decisively. Once again, it picked higher. You can see that um, long green candle. That's 3 a.m. On the 26th, um, October 2018. There's the buyer. Now we have, you see after that, you have 4 candles, 3 of which are red, but they have long wicks below. Tells me there is trapped buying underneath. And it also tells me above, between 1238 and 1240, there is some selling. We'll see how it reacts. GDP today, consensus is 3.3%. Uh, I think last I think last GDP was 4.3%. So if we come in a little stronger than that, this is just me off the top of my head. If we come in higher than that, then that makes Powell less likely to come out and say anything but "See, I told you so," because that seems, let's face it, you have a Fed that pays attention to numbers now. All right, not a Fed that says we're not so sure, but he's going by the numbers. If it comes in under 3.3, who knows what the markets will do? But I'm just telling you what the Fed's attitude will do. They'll be more convinced, more adamant. Friday follies. Today is Friday. Get me out before the weekend. If usually for the last, I don't know, 6 to 8 months, if there has been a strong trend during the week, Friday seems to be a counter trend. So let's say you had a lot of algorithms selling the market all week long and making money. Friday would be a closing thing. Happened a lot in oil for the last several months. There was a distinct pattern where on Fridays, without a number, without any data coming out, the market would rally. And it happened frequently in gold. Whatever the week trend was, Friday seemed to be a counter trend. Whatever would hurt the most people possible. All right, getting to trading, and we'll do where the markets are right now in a second. Uh, Getting to trading levels for active traders. There's nothing on the VBS radar except for the 4 hour, which is actually a very good one setting up. Whether we get it or not, I don't know. But we above 1239.70 on a 4 hour basis. If we close there, you're probably, and that's not definitely, it's on my radar. It doesn't mean it's going to be triggered, but above 1239.70 on in the next, if we see at 10 o'clock a.m., or I think it's at 9:30. I've done this a little bit a half hour ago. At 9:30, this works on a 4 hour basis. At 9:30, above 1239.70, the market will probably give me a buy signal with a stop at 1239.70. So if the market were to come in at 1240, 1241, and settle there in the 4 hour bar, you'd buy it. I would buy it. I would potentially buy it with 1239.70 as a stop level, the recommended stop level. You can play around with that if you want. And if the market for some reason should wash out, 1230.70 would be the number on the downside. Now, these seem rather wide. They're actually not that wide for a 4 hour chart based on recent volatility. Volatility has expanded. So we're looking at a mean of the mean of volatility is also widening. The risk of reward will also widen because if you're expecting bigger ranges, $20 ranges, let's say, which is something to hope for, then your stops are going to be $5, not $1, and you're going to use less volume, or you're going to either move your stops or move your volume to deal with that. So now keep this in mind as we go through the rest of the numbers. Now, range or flow trading, this is something that I draw up. It's not technical. It's based on how volumes trade, and there are systems, there's software that quantifies that. We're not going to get into the software I use right now. Between 1240 and 1244, that would be where there's a lot of selling. 1244 with an asterisk because that could also be a buy stop area. I want you to notice that my breakout level on the 4 hours, 1239.70, and at the same time, if you're a range trader, 1240, 1244 is your area to sell. So it would be very conceivable to get a buy signal if we set it at 1242 and proceed to get stopped at as the market goes back below. Which leads me to think that if we were to get a buy signal, just thinking as a trader out loud for everyone's benefit as well as my own, if the market were to settle 1240, 1241 on a signal that is generated by the VBS, then I would be nervous, but I would buy into it. I would, however, also anticipate if the market would go settle above the 4 hour level of 1239.70. It could settle as high as 1248 because I think once it hits 1244, you're going to see some stops and skate higher, and so I'll miss the opportunity for the trade. 1233, 1235 is also an area for range trading. So you're a seller at 1240, you're a buyer at 1235. So that's basically a $5 range if you're lucky. Below the 1231, 1233 area is a secondary buy area. I don't like it. I see it as an extension to the downside. I think below 1233 is dangerous. We've tested it a couple times and have held. There is buying there, and you can see how that trend line doesn't show up as much on the 240-minute, but it shows up pretty strongly on the daily and the hourly. But it's because it's drawn on an hourly chart, but it does show up as important. You can trade it as it's almost like the mean for the last couple of days. All right, technical levels. I do have a trend line. That is that white trend line, 1236.90. I don't see us. Well, that trend line is getting steeper. So if we do fall, we're going to fall at a much more aggressive angle. Opinion. Okay, Michael Moore's work. This is him writing from the higher call. Okay. Again, he's not telling you to get long. Everything he says has a disclaimer, and my disclaimer is don't be stupid. Think for yourself. Get long on a decent penetration. All right. We'll define the word decent. Decent for him means use your own math. Is it volume? Is it how long we stay there? But, something that qualifies it. It's 8:15. I'll be ending in 4 minutes. It's 8:16 now. We'll get long and decent penetration above 1238.40. That makes me feel very good because if I could just scroll back I have 1239.70. So if we settle at 1240, 1241, I now have a great technician's number on top of my system saying to get long. So maybe that 1240, 1244 range, trading range area is not going to hold next time up. All right, you can just scan through that, read through yourself. All right, on the downside, get short below 1233. So for him, the range is implicitly 1233 to 1238. There you go. Mine is 1233 to 1240. So there's your range. So if you want to play around on the inside of that after the first hour or during the first hour, that's fine. Remember, 8:30 we have a number, so 12:30 is on the table to go below, and 12:44 is on the table to go above for whatever reason. Whatever reason we do pick on 8:17. All right, I'm getting off in 30 seconds. Everyone, after the number, whatever the market does, it is Friday. So, for whatever reason, if we have a $10 rally and then there's an hour left in the day, you could have either another $10 rally or a $20 sell off. I think between 1:30 and 3:30 US time, Eastern, you should be aware that I've seen algos come in at 2:30 right after the bell. I've seen people who want to cover at the very last minute on the U.S. old floor close time come in. Just be aware of violent reversals for seemingly no reason late in the day. Palladium correlation coincidence. Okay, I have to say it's not working on the way down unless it does work, but it'll be certainly delayed if it does. Everyone, have a good day, and we just put up where the market is right now for because that would be nice to talk about. Okay, gold is trading 1234 and a half. D Skull 1237 and change. That D there, I'm delayed for some reason. This app is now having me on delayed, but uh, basically it's the same level. You can just add $2.50 between gold spot and gold there. So we're hovering right below some levels that are important. Let's see what happens at 8:30. Have a great day. My advice to myself is be flat going into the number, especially in gold because it will gap and you will have liquidity gaps. Your stops won't be honored in an efficient way because the market will gap. Have a great day and be safe.